Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. Sadly, we are a man down once again this week, but Tom, you are back with us after having last week off. How are you doing? How's your week been?
I'm doing very well. Yeah, had a cheeky bit of annual leave on last week, so I've been feeling refreshed this week. It's good to be back, and unfortunately Francis isn't with us this week, but we're going to power through anyway, and we've got some really good stuff to talk about regardless. So should be an interesting one.
Yeah, absolutely. Some really interesting news coming out this week. So what are you going to be talking about today?
So this week I'm going to be talking about a new initiative from British bank Santander, which is trying to improve public knowledge about deepfake technology.
Awesome stuff. And my story this week is all about Aro's partnership with personal finance app TotallyMoney to give them secured loan advice. But I will let you go first. Let's hear a little bit more about deepfake technology.
Absolutely. So, as I said, Santander is beginning a new initiative which is really trying to make the public way more aware of the dangers being posed by deepfake technology. And this initiative comes after it found that as much as 53% of Brits have either never heard of the term deepfake or misunderstood its meaning completely. And I'm sure, Polly, you've seen a lot of deepfake scam videos across whatever social media platforms. And I have too. You know, I feel like rightly or wrongly, I would consider myself to be pretty tech savvy and like aware of what's a scam and what's real. And, you know, even for me, it can be really tough when I see deepfakes. You know, I've seen several deepfake videos, for example, of Martin Lewis promoting whatever kind of scam, saying, oh, we've got this great opportunity for people, this government initiative, in inverted commas, that you can click on this link, sign up to this website, and you'll be getting all these great benefits or whatever. And it's obviously all just trying to, you know, scam, trying to get money off you or trying to get information from you. And sometimes I can get 10 or so seconds into a clip like that before it actually dawns on me, like, oh, this isn't a legitimate clip of Martin Lewis talking on whatever show. It's actually a deep fake. And I think that's what is the scariest part about deep fakes is, you know, if the video's good and the lips match up enough to what's being said and the face and movements look natural enough, then it can be very believable. And, you know, it can take quite a while for even, you know, the most tech savvy people to realize, oh, this actually isn't legit. This is a deep fake or, you know, a scam or whatever the case may be. And I think at the speed at which AI is advancing, it probably means that deep fakes are going to continue to get more and more realistic and convincing, leaving everyone more vulnerable. And obviously, it's not just scams too. Deepfakes have the potential to spread a lot of misinformation. We've seen obviously the dangers of misinformation in the UK, of, you know, sparking riots. And, you know, that's why I thought this was really important initiative from Santander to try and tackle these deepfake videos and make people more aware of the dangers of them. And it's doing that by teaming up with a qualified financial advisor and finfluencer known as Mr. Moneyjar to improve public knowledge of the dangers posed by deepfake technology. So, as part of this initiative, Santander has created deepfake videos of Mr. Moneyjar, and also the Santander fraud lead, Chris Ainsley, has posted these videos online. And basically, they're deepfake videos where the two of them are sat there saying, oh, we've got this great opportunity for you, this, you know, whatever the sort of scam rhetoric is. And then the video cuts off and then it goes to them actually speaking and saying, oh, you need to be careful because that was a deepfake video. That wasn't me at all. And having watched them myself, you can also take a look at them for yourself on the Mr. Moneyjar Instagram account. You know, it's definitely good enough to fool people and convince people. Even on the post itself, there were so many comments from people saying, "Oh, I was convinced it was real until like you appeared on screen and explained it wasn't." You know, you've got some eagle-eyed people saying, "Oh, I realized it was a scam." You know, when you look at the lips, they're not quite in sync. But you know, it can take people, you know, really looking at the video before they actually realize this isn't legit. You know, Santander also found that only 17% of people are confident in their own ability to identify a deepfake video. And, you know, I think if anything, this is going to surely decrease as the tech improves and people get less sure about what is real and what isn't. And the data also shows that many have previously come across a deepfake, with over 36% of Brits having already knowingly watched a deepfake, and I'm sure more watch them without even realizing that it was one in the first place. And given the dangers of this, I was really interested in getting your perspective on this too, Polly. Obviously, it's a really scary development of the internet and something everyone needs to be really careful about. But do you think there's a solution to combating the threat of deepfakes, or is it just a case of everyone needs to be aware and we just need to be way more wary on the internet and know that this is going to be a thing that we have to contend with for potentially the rest of time?
I think I think you're absolutely right in saying that it's scary, because it is. It is quite terrifying if you think too much about it. It's one of those things, I think scams in itself are quite scary. And especially you hear, a lot of different news stories about different scams. And there always seems to be sort of like the scam of the moment that's like trending a lot, whether that's, like romance fraud or like people texting mums and dads pretending to be their kids in trouble, etc. But yeah, deep fakes feel like they're going to be something that we're going to be contending with for quite a while. Just as you were talking then about Mr. Manager, I just quickly went on Instagram to watch that video you were talking about, and that is absolutely horrifying. Like, that's so scary, because I would not have thought that was a deep fake until he said, oh, by the way, that was fake. So that is quite scary, and you see them a lot. You see a lot of different scammy type things coming up on like TikTok and Instagram, and just the amount that are out there is a real big issue. So I think it's a really good thing to see Santander trying to be a bit more proactive in terms of, helping its customers and consumers to understand what a deepfake scam might look like. Because I think the more people know about it, the more people can, combat it, and they can work to make sure that they're sort of understanding what they're doing. But at the end of the day, it's something that I think we need to get some bigger fish to weigh in on, whether that's a problem for the government to come in. I don't know what they could do. I mean, like, I'm saying that they need to fix it, but God knows by doing what. I don't know how you can combat that in a way, anything like that. And things like, but even like the platforms itself, I do think like Facebook, TikTok, and Meta, or whatever the big social media platforms are, I do think they need to be proactive as well, in terms of if that content appears on their platforms, they need to be quite quick in taking it down. Again, I don't know how that would look like. I don't know how policies like that could take place, because that's, not my area of expertise, but it's something that I think we all need to be aware of. And yeah, I think it's just keeping your wits about you, isn't it? And I think that's always been the case a lot of time with different scams, even before AI and all that sort of came into fruition, and the social media and the internet. I think it's one of those things where you really have to ask yourself, is something too good to be true, or does something feel a bit off? And if so, you know try and look into it a little bit deeper. And things like this do worry me, especially when I think about like my parents or my grandparents, because they would absolutely fall for something like this. Like, bless them. That's just the kind of thing that you worry about. So yeah, scary world. I'm glad to see Santander taking the lead in helping keeping consumers safe, but I do think more needs to be done. What that more might be, I'm not really sure. That's for all the more important people to figure out. But yeah, absolutely agree.
Yeah, I think your point about the sort of big tech firms weighing in on it and trying to reduce the impact of these is really important. I think that's the way to go. Is we need these tech firms to that are running these social media sites to be a lot more proactive about taking the videos down. Maybe if there's a way for them to be screening them before they go up in the first place, that's potentially something that could be really important. But I think it kind of reminds me of the conversation we've had quite a lot about APP fraud, which is it, a lot of it is happening on, say, Facebook Marketplace, but Facebook doesn't really have a duty or anything encouraging them to actually make that step themselves to reduce it in the first place. And a lot of the culpability comes down to the banks having to refund customers for these scams and fraud attempts. And, as people say about APP fraud, maybe there needs to be a level of culpability for the tech firms if there's any type of APP scam that occurs. Maybe they should be covering a percentage of it. Maybe there should be laws implemented that ensure that they have to have certain protections in place. And I think that we might have to go down a similar conversation and road for deepfakes, and saying there needs to be a level of culpability for these firms in order to basically push them to do something about it. Because at the end of the day, if they're not if there's no benefit to them for reducing this type of fraud, and they're not culpable for any of it, then they're not really going to implement the time and resources and money to change it and reduce that type of fraud. So I do think it's a really important kind of aspect that we need to consider, and whether it will be like APP fraud, I suspect it will, that it takes a very long time for people to even begin that conversation and introduce those types of things. I mean, we still haven't seen it yet. So we might be in for a very long period of time where consumers are pretty unprotected, especially when it comes to these social media platforms. And it'll be really interesting to see if something can be pushed through a little bit quicker than it is with APP fraud, and hopefully make consumers safer. So yeah, I just thought it was quite a scary thing. I think it's one of the types of scams that certainly concerns me the most, because I think, normally, when you look at phishing or anything else, I'm like, I could spot one from a mile away. I'm not going to get tricked by anything. But then when it comes to deepfakes, I'm sitting there 10, 12 seconds into the video, I'm thinking, what is Martin Lewis about to say? And then I realize, I've been tricked for at least a short amount of time. And the better it gets, I think the easier it's going to be for scammers to trick me and other people. So it's an important one to look at, and I'm sure it's a topic we're going to be talking about a lot more in the future.
Yeah, how dare they use Martin Lewis's likeness? Poor Martin Lewis, the hero that he is.
The only man we can trust, and now we can't even trust him.
You can't even trust him because he might not be real. Anyway, thank you so much, Tom. I mean, we'll move on to mine, and I guess it is kind of a very similar sort of vibe in terms of, helping consumers and customers. So essentially, Aro, who is a UK-based embedded finance partner, has partnered with a personal finance app, TotallyMoney, to help bring personalized credit matching capabilities to secured loan customers. So TotallyMoney are going to be able to offer customers a greater choice of loan products, as well as offering some more flexible terms, lower interest rates, and as well as values that align with their consumers' financial goals. And I thought this was just a really interesting thing to think about, because I think we talk a lot about, consumer preferences, consumer demands, and kind of the having those tailored products and services, which, we know are super important, I think, right now for different financial services companies in order to really get into what customers want and offering them what they want and what they need, I guess, on a different sort of level. And I think, this new partnership between the two is really interesting, because obviously it's showing that they are sort of taking notice of customer needs and credit matching them specifically, which will hopefully open the lending playing field up for, underserved people in the financial world who maybe are struggling to get credit for whatever reason, or, wanting to improve their financial stability and things like that. So by using data-driven insights, they're really helping to sort of like hone in on what it is that customers can have, educating customers as well in terms of, secured loans, the benefits, and their long-term financial health. And just generally, I think, hopefully proving access, because, we always speak about the difficulty of access to credit, especially, when you're underbanked, underserved, a thin file customer, or things like that. And especially, with, cost of lives rising at the moment, maybe people are relying a little bit more on credit than they used to be, and so it's quite a difficult market to be in, especially if you are a thin file customer. So I mean, I wanted to sort of bring you into this, Tom, and just kind of see, A, I guess, what you thought about the whole thing, but B, is this something that you think is really important when we're thinking about sort of building up the economy and like helping people, make the best choices for their own financial situation? Or, do we need to be starting thinking about things other than credit? Is this, credit decisioning and providing access to credit, is that as important as maybe financial education, or just like, improving access to budgeting or other financial advice tools? I mean, I'd love to know what you think.
I think, as always, there's a sort of an argument to be said for both sides. And I think, we always talk about the importance of financial education and making people more aware of how they can manage their money and how they can, better budget and the different sort of opportunities that are available for them. But I think, given the world we live in, there's always going to be a need for credit, and people need access to credit, and they need to be able to access loans and lending, opportunities. And I think something we've spoken about a lot on this podcast before is how legacy systems and technology are still so prevalent in the banking space, and it's so difficult for even the biggest high street UK banks to implement, let's say, data-driven insights. And all the data exists. They've got this, huge amounts of data to utilize. Yet they don't have the technology to actually make the most of it. We're talking so much recently about how AI is kind of impacting that space, but the amount of time that actually takes these banks to implement that kind of technology and to make it run alongside the sort of existing legacy systems makes it really, really difficult to actually introduce those things. So I think this type of introduction and idea is really important, because the quicker fintechs can sort of introduce that sort of data-driven insights is going to be really important. And I also think just something else we've spoken about is how lending isn't necessarily fair. It's quite an old sort of system. We view it on sort of old data and old factors, and yet something that's spoken about a lot is how people spend so much on rent, yet they can't get a mortgage, even though the mortgage repayments will be lower than that. And how, the amount that they're earning isn't necessarily the perfect way to see if they can afford those repayments. And I think these types of data-driven insights are going to be a huge step towards ensuring that, people are able to access the loans that they can afford, and it's not going to hold people back financially in that respect. So yeah, I think, going back to your point, I think financial education is hugely important, and we shouldn't shy away from the fact that it needs to improve across all aspects of finance, really. But this will go a really long way, particularly in the sort of high interest environment that we're currently in, and how lending is getting harder and harder for people to get. I think this could go a really long way in combating that. And yeah, I think it's just an exciting sort of time to look at. There's a lot of good to see in this, and yeah, I think data-driven insights is definitely the way to go, and hopefully we'll be at a point soon where more and more firms can introduce it.
Yeah, absolutely. I literally love everything that you've just said, and I think you've hit the nail on the head entirely. And I think the one thing, sort of echoing what you just finished off with there, Alistair Douglas, the CEO of TotallyMoney, said something that I really like, which is making people's data work for them, not against them. And I think that's kind of the sort of the key thing here of this sort of partnership and this kind of whole thing about helping people access, affordable credit options or affordable loans or whatever it is that they need. And credit scores and credit are still, I think, quite a scary thing, for want of a better word, for a lot of people. So having a data-driven tool to go, this is what you can afford, this is what we can offer you, this is how we do things, I think you're right, is going to be so useful. So it'll be interesting to see how this sort of moves the sort of the industry forward as well, and whether other people kind of get on board with similar situations, which I'm sure, I think a lot of people already have in terms of data-driven insights. But yeah, it's interesting to see where data can take you. But anyway, that does bring us to the end of our discussion today. Thank you so much, Tom, for bringing your article and chatting about fintech with me. If you want to hear anything about one of the end of the articles that we have spoken about today, or anything else from the fintech world, head on over to thefintechtimes.com, where there are plenty more news and insights over there. But very quickly, we will move on to what I learned this week. So each week, so much new news and information is crossing our desks, being on the Fintech Times editorial team, that we thought it'd be fun to share that with our listeners. So Tom, what have you learned this week?
Well, this week I saw a pretty interesting study from the financial wellness platform Nudge Global, which revealed that younger women are much more likely to feel anxious about their financial situation than men, with 45% of women in the US aged 25 to 34 feeling anxious about their financial situation, compared to just 39% of men in the same age group.
Awesome. And what I learned this week was what PropTech was. It is our PropTech month at the Fintech Time, which I know feels like a bit of a cop-out using that from what I learned this week. But before this month, I had no idea what it was. And now I do. So yeah, PropTech, the integration of technology within real estate. You're welcome. But anyway, thank you so much again, Tom, for joining me this week. Shame not to have Francis here, but hopefully next week we will get the gang back together again. But for now, thank you so much again for talking about fintech with me, and I will catch you on the next one.
See you and hopefully Francis next week.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.